Hello and welcome to today's webinar, Strategies to Make Cross-Border Payments Faster, Cheaper, and More Reliable. Today's conversation will be moderated by Roxy's Thomas Trepanier. The meeting will be approximately 60 minutes with 40 minutes of panel discussion and 20 minutes of Q&A from the audience. You can use the Q&A box at the bottom of the screen to ask questions. For questions we don't cover, we'll send a follow-up email. The webinar will be recorded and will be made available to share. And if you stay to the very end, you can download a complimentary research report from the block, Under the Hood, the State of International Settlement. And with that, I'd like to turn it over to Thomas.
Good morning, everyone. Thank you all very much for taking the time to join this webinar today. My name is Thomas Trepanier, Head of Business Development here at Roxy. I'm joined here today by three panelists, esteemed colleagues in the industry, to talk about some of the interesting topics that have been taking place over the past year. And as we begin the year 2020, we'll be talking about three main categories today: the challenges that remittance companies, central banks, and vendors face when processing cross-border remittances, what strategies and technologies are working and not working to address those challenges, and finally, what the near-term and longer-term future holds for payments and remittances in our current pandemic and beyond. I'd like to take the time to introduce the panelists that are here with me today. First, from N2 Express, Kunbi Ogunwe is the CEO. Kunbi is educated at the University of Chicago, Harvard, and his work career started with 11 years of strategy, consulting, and banking advisory work with some of the world's leading companies, including PricewaterhouseCoopers, Ernst & Young, McKinsey. And Kunbi then transitioned from the advisory side of the business to corporate banking, starting as the head of strategy for FBN Capital, and traversed roles in head of strategy, CEO, chief of staff, and head of MIS for EcoBank. He's now the CEO and founder of Alpha Fortress, Canada's leading online cross-border bill pay and money services site. Welcome, Kunbi.
Thank you very much, Thomas.
I'd also like to introduce Fabiola Herrera. Ms. Herrera is responsible for executing the regulatory, technological, and operational functions of the payment systems for the Dominican Republic Central Bank, and ensuring its development in the context of its best international practices. For 15 years, she represented the Central Bank of the Dominican Republic before the Payment Systems Technical Committee of the Central American Monetary Council, a committee that promotes the operation of SEPA, a system that interconnects the payment systems of the countries that belong to the CMCA. Ms. Herrera has joined the Central Bank after 14 years in the private banking sector. Welcome, Fabiola. And finally, I'd also like to introduce Jacob Aruldas, the CEO of ECS Fin. Jacob is a visionary of ECS Fin, an engineering firm that specializes in the optimization of transaction processing systems. ECS delivers messaging, payments, and post-trade processing solutions that drive strong ROI for major banks, capital markets, and corporations. Prior to ECS Fin, he served as an advisor and architect to major financial companies and corporations. Jacob received his PhD in engineering from the University of Florida, where he has actively contributed to R&D. He is a published author and served as visiting faculty at Columbia University, where he teaches research methods to graduate students in engineering and medicine. So once again, I want to extend a warm welcome to everyone. We will be starting off with certain questions per panelist, and then we'll leave some time near the end for some Q&A for those that are in attendance. I'd like to start off with Jacob, and this question will be applicable to all of you on the panel. Prior to the pandemic, what were some of the drivers of growth for you from ECS Fin's perspective, and how has that changed based on where we are today?
We believe that the pandemic has accelerated the process of banks wanting to be digital, and it all created more fundings and speed up process whereby quickly decisions can be made and projects can be started off. So we are in the bank-to-bank communication specialization. So we are seeing a lot of legacy systems limitations to be taken care of, upgraded, so that we can support the front office and provide customer services in a way that they will be able to take advantage of all the modern methods that are available. And we believe that that practice may continue because of the fact that the convenience will always be there. And unless there are other reasons there, we believe that even after the situation is over, those practices will continue.
Fantastic. Love to pass the same question over to Fabiola. So again, prior to the pandemic, Fabiola, from your vantage point at the Central Bank of the Dominican Republic, what were some of the drivers of growth for you?
Thomas, the first thing I want to say is thank you for having me here, and to disclaim, this is a disclaimer that we always do, that my opinions are mine and my own responsibility, so they do not implicate the institution where I work. So having said this, prior to the pandemic, we were working in innovation, and for innovation, we were looking at financial inclusion, and that was the main thing. And the driver for that was we needed the whole country to be able to operate and to be part of the financial system. And that driver that made us think about innovation and how to do new things, we were focusing on a combination of financial education, regulation for fintechs, and a lot of motivation for the formal sector. That was prior to the pandemic. Now, besides that, because the driver remains, the driver is financial inclusion. Besides that, we have the certainty that the digital financial infrastructures are the only way forward. And we are also aware of the need of a more inclusive ecosystem. Of course, all that must be done considering the main objectives of central banks that are always to preserve the economic and financial stability. So as we see it now, it's a game of balancing new players and old rules.
Excellent. Very interesting. Thank you very much, Fabiola. And Kunbi, from your vantage point at N2Express, prior to the pandemic, what were some of the drivers of growth for you?
Thanks, Thomas. Prior to the pandemic, we were on a macro level. The drivers of growth were pretty much global migration. We had seen an almost 10-year run in remittances as migration from less developed to more developed, east to west, south to north migration had continued to increase exponentially. You could probably start with the 2008 financial crisis as a trigger point, and we've seen almost double-digit growth in remittances globally, and we had that reflected in our platform as well. So we were planning and expecting 2020 to be a pretty strong banner year as we were migrating to the next decade, and then the pandemic, of course, brought things to a screeching halt. So the driver of growth prior to the pandemic was just the increased mobility globally from the different country corridors I mentioned, and we saw that reflected in our numbers. Now, what has changed in the pandemic? The drive to digitization, which is where we play. So fortunately, it does have, it suits us a little better than some others. Physical touching of cash, physical proximity, social distancing, issues that are now rife in our society as we still are struggling through another year of the pandemic, driving people forward further and further to the digitized world to try to send remittances. So we expect that to be accelerated in the forthcoming years.
Interesting, very interesting. It's interesting to hear the different perspectives from all three of you, and I assume that we should see further growth on all of those areas in the coming year as well in 2021, and hoping for positive things for all of us. As we continue, I guess I'd like to pose a question for Jacob. So within ECS Fin, what factors are you seeing drive the new areas of development? With those, for example, could it be speed, demographics, blockchain, so on and so forth? Sorry, Jacob, I think you're on mute.
Sorry. Our middle office application is already ready for digital transformation and all the various functionalities that users would want to have. And what we are currently trying to accomplish is two things. One is how to fill the gaps that some core banking systems and some front office applications are facing, so that the user experience can be translated and made available to the customers of the various banks. And the second item where we are trying to add value is the fact that we want to be able to help the banks offer their customers all the options that are available for their customers concerning each payments, and all the pricing and cost factors, so that the customers can take an informed decision rather than pushing those decisions to the bank. That way, there will be plenty of opportunities for the customers to identify what works well for each type of payment that need to be settled separately. And also, if the banks can offer such capabilities, then that will allow the customers to continue to utilize the services rather than look outside for the kind of needs that the industry is pushing them to have.
Okay, interesting. So it's a positive. So it sounds like a lot of positive opportunities for you at ECS Fin in that case.
Yes, and we are able to engage new payment rails in our platform fairly quickly without causing any disruptions. The way we address payments is we look at it as additional opportunities or additional modules within our platform, whereby all we need to worry about is routing rules, and that will decide that any number of new payment rails can be easily engaged in our platform without having to disturb the core systems or any supporting systems of the bank.
It makes sense. So the banks will be able to leverage their investment in ECS Fin in that case.
Correct. They would not have to do any kind of destructive or changes to their environment, and they will be able to smoothly engage these modules without causing rather disruptions. Yeah.
Fantastic. Thank you, Jacob. Question for Kunbi. So from your viewpoint, what strategies and technologies are working or not working to make cross-border remittances faster, less expensive, or more reliable, as an example?
So I'll start with the positive, what's working. And I think it might come up in a future discussion here, but I think the blockchain is something that needs to really be emphasized, as that can help bring down the cost of remittances, as well as reduce the time it takes for remittances to reach the destination. And the reason being a number of factors. You have the ledger, which is the blockchain is a beautiful, wonderful ledger where all participants can see a transaction occur and who are all the different actors in that transaction. So that's really important for trust, which is a big issue in our business. People don't trust each other, which is why we have so many different regulatory hurdles that we have to overcome, and also commercial hurdles we have to overcome. So I think the blockchain is a technology that has been talked about and is now much more used in silos, but not yet ubiquitously, which I hope we see that happen more in the next couple of years. Now, what hasn't worked for us in the past couple of years, I think it's the over-reliance on commercial bank networks that hasn't worked for us. As more and more of our customer base comes to us and tries to ask us to stretch our different payment rails, we have to rely on different bank networks. And then we default to SWIFT in certain instances. Certain entities, certain countries, the payout options are limited. We have to use IBANs, we have to use SWIFT, we have to use technology that I think is a couple of decades out of date right now. And so we are not in a position to rapidly expand to give our customers the sort of different payment options that they would like to, because we end up knocking against Swift, which I think is still running on the same platform and technology from when it was first started in the 50s and the 60s. So I try to, as much as possible, avoid connecting to networks where we end up using Swift as the last mile option. So for me, that's a bigger challenge.
Okay, no, it's interesting. As the space continues to transition into blockchain, sounds like that's a positive area for you.
It is.
Okay, excellent. I guess so Fabiola, from your vantage point, what are some of the challenges that you think central banks face from processing cross-border remittances or payments, and from your viewpoint?
Yes, central banks have two roles in this. One is the regulation, and the other is as compilers of remittances of the information, right? So as we see it, we want to promote efficiency, and we want to promote lower cost for the sender and for the receiver. So those two issues are related to the like of the cash. People who receive remittances in our countries, they love cash. So this is much more complicated to do it than say it, because even though we can digitalize the way the money gets in here in the systems, at the end, the receiver wants cash. And that's a big headache for all the parts involved. So what that is a challenge for us, because it's not only to work on the origin of the remittance, is also to work at the other end. Mm-hmm. And working in the other end means including financially all these people and making them want to receive the remittance in their account. So that's the hard part. And for instance, if you go to a very small town inside the country, they would say, I cannot use it if I don't have it in my hands.
Right.
So it's much more complicated than talking about the remittances. It's the whole process of financial inclusion that needs to be done before we can say, okay, I'll send the remittance, and using blockchain, using the system, this fintech is going to be part of the process, and the banks are also part of the process. But the thing is that if the people receiving the remittance says, I want cash, and I want it in US dollars, for instance, not in national peso, that's another headache. So what we are doing is that to face those challenges, we are, as I said before, our main driver is financial inclusion. And that has a lot of education involved in the process. It's hard, but we are moving forward. And if you see our statistics in our webpage, things are getting more digital lately. And the pandemic has been a big driver for all this, but still a lot of work to be done regarding this, the like for the cash and the like for getting US dollars and that posed also an FX challenge in the middle of everything. So
Sure.
these are our challenges as regulators. We think that all the players already involved are doing their part, but the main challenge is at the end. I think if we can make these receivers of remittances of cross-border payments to want them, we have to offer them something in order for them to prefer to receive it digitally in an account, whatever type of account it is.
But right. Oh, that makes sense. Mm-hmm. It makes sense. I can understand that. Even culturally, in many different markets, I think it's it's going to take time for individuals to really trust that the digitization of the currency is going to be the same as receiving cash. So I can understand.
If they don't get it in cash, they are not going to be able to use it.
Right. No, there's a lot of, I think,
So it's complex.
yeah. It's not an easy, there's no easy answer to it right at the moment. I understand. Thank you for that, Fabiola. As we transition to Kunbi, so from your vantage point at Into Express, can you talk a little bit about the benefits of, or you talked about blockchain being a positive aspect from your viewpoint. Could you expand on that a little bit and talk a little bit more about the benefits of using that technology to improve the payments and your experience and so far and planning to use that?
Yeah, so one of the little secrets of the money transfer industry, I think most people don't recognize, is how much money we have to put forth, what I call dead money, to make a transaction go smoothly. So a traditional transaction is somebody comes into our platform, onboards to our platform through mobile or desktop or tablet device. And the expectation now is that the money will get to their destination in a matter of minutes. There's a lot of hype, promises, marketing claims made by the field that money gets there almost near instantaneously. Now, how does that happen? It's not like money just appears out of nowhere in a separate account in the DR or in India or in Mexico, areas, countries that we send. We have to have pools of funds sitting unutilized, waiting for a receipt of an instruction to pay out. Okay. That dead money can be quite expensive. So on a factor of, for every dollar that we send, we almost have $4 sitting globally, waiting to be utilized, right? The banks who are holding onto that money in other parts of the world love it, but we who have to raise the funds treasury, it's a real pain. Now, how does the blockchain help with that? The blockchain helps because of instant settlement. So what happens is that the instructions that we send are converted in a simple switching system. I'm going to try to simplify this. But the payout partner that I may have in another part of the world on the blockchain trust that I have the funds and will settle them. So they'll pay out on my behalf. I don't have to have money sitting on reserve waiting for an instruction. The moment the instruction hits the blockchain, they are certain because they can audit my own reserves in my part of the world, whether it's the United States or Canada, to know that the funds are sitting there for them to be converted when they seek to use it as well. So that instant settlement, I think, is the real game changer for us from a profitability standpoint. If we lower our cost, we pass it on to the consumer. So the consumer expects near instantaneous transfers. I can't pass on the cost of dollars sitting in multiple parts of the world in vaults that I don't have any control of. And if that customer doesn't ever send to those countries, those vaults just sit for my money for weeks, months. We have accounts that we don't even touch for 3 weeks, 4 weeks, that's a stretch. But with the blockchain, we are pushing for near instant settlements. And there's certain corridors that we're working with actively where that is the case. We have 1 or 2 active corridors where it's a near instant settlement. We don't have funds sitting in the other country. The moment a request comes into transfer money to that country, the blockchain does that conversion, payout partner makes that transaction. We then settle on the back end through the blockchain. It's huge windfall for all of us. Savings, time, and the headache of managing multiple FX, LC, local currency lines just to maintain this near instantaneous speed. So yeah.
That's an interesting point. Yeah, so the pre-funding of the transactions is not only expensive, but the risk associated with it is I would imagine is huge as well.
Absolutely, yes.
Yeah. Okay. Very, very, very interesting. It's some interesting trends we're seeing here. I think that over time, well, it sounds to me like we'll start to see things streamline a lot moving forward, and not only from a digitization perspective of the currencies, but also leveraging the newer payment rails as well. So it's interesting to hear the commonalities across all of you. I guess, Jacob, from your viewpoint, do you foresee if we used, let's just say, if we use the Uber or to taxi comparison to show impact of no change, do you foresee the need to make the move from a fear of missing out perspective? Oh, sorry, you're on mute again.
Sorry. Yes, yeah, I think so. Not only from a business perspective, but also from a social imbalance that it creates. For example, I use taxi quite a lot because I travel in this profession. For me, it's a lot more convenient to call Uber. And while I sit in the Uber car and go through my local taxi stand to get to the airport, I see many taxis idling, waiting for a call while I am sitting on a car that came and picked me right away. So what that has resulted is a kind of social disruption where a lot of traditional taxi drivers are not able to make both ends meet. They are soon going to die out of business. At the same time, people who are already engaged in a responsible job, like a school teacher or a office clerk or somebody who could be sitting at home taking care of other aspects of life, they are now working extra hours because this drives for like every hour you invest, you're getting some more money. So we probably are not very much disciplined or not able to see at this point in life what is more important than to spend all the time in making money. But later in our stage, we may look back and regret saying, oh, I spent all my time making money. So that all those things can be regretful in the big picture. Similarly, when we look at banks, traditional banks are, if they are not able to offer the kind of services that are being provided by tech companies and all the convenience, the reach, and the cost savings, or rather most of all the convenience and speed, if that is not being addressed by the traditional banks, then similarly, there's going to be a major shift that we are already happening, where this business is going to be taken away from those banks, and then we are yet to find out what kind of social disruptions it can create. So, looking at the best interest of how the whole ecosystem works, we are more driven towards equipping banks to compete and stay in the cutting edge of technology and to motivate their customers to stay and even have better services and than what is probably available out there. So that is one of our primary missions in this journey.
Yeah, it's prompting a lot more competition. It's at the end of the day. No, it's interesting. So it's thank you, Jacob. I guess as we move away from, I guess, the pandemic, and hopefully that happens sometime in the near future. Fabiola, how would you view central banks being able to find the right balance between regulation and stimulating innovation?
That's a question I left on the table on the previous question. And the reality is that now many central banks are open for dialogue. They are issuing new regulation, including ourselves. And we are making fintechs part of the ecosystem. Recently, we saw a very interesting shift here because now the fintechs and the banks have an agreement to cooperate, to create synergy. And that's really good. And that's quite different from the position they had maybe 2 years ago. So central banks are open for innovation, and we are very sweet to change the innovation that needs to be changed or issue new innovation, because these new players, they do have to be part of the ecosystem, because we need more efficient ways, more efficient means to take the financial system to the general population, because this pandemic is not going to go away tomorrow. I think it's still here for some time, and many of the changes that are already in place are going to stay, because people that already made the move to digital financial services is going to stay there. Many banks are closing branches, and I think this trend is going to continue. But we also are building sandboxes, many central banks. So all this technology is part of the regulated ecosystem. But again, we can do all these. We can use blockchain, and there's no regulation that forbids the use of blockchain for payments, for instance. But then again, we have to focus on the final user of the financial services.
Right.
This person that is not going to change, that wants to feel the money in their hands. So this is a big challenge, as I said before, that we need to work with these people. Jacob mentioned before that maybe the fear of missing out can move them. I agree with that, but that needs a very large advertising campaign. Also, in our countries, we use the government subsidies to make the people move to digital financial services. We are using cards for this, but of course we can use apps in a phone. And if this is the carrot we need for the carrot and the stick thing, then we'll use it. We are looking forward to keep this balance between regulation and innovation, because after the pandemic and maybe before that, we are so convinced that going digital is the only way possible to move forward and to promote efficiency.
Excellent, excellent. Thank you, Fabiola. It's very interesting. I guess to take what Fabiola is mentioning here can be, as your firm or your part of the industry represents the last leg of the transaction, you have actually a unique, quote unquote, responsibility to ensure that the end beneficiary is able to take the funds as expected. How have you seen the reliance on banks changed, and are there any beneficiaries taking the remittance in cash, or do they leave it in digital form, or do you foresee the digital form being left in that form in the near future if it's not happening today?
And so that's a good question, and let's try to unpack the different aspects of that question, Thomas. So the last mile is the most critical for us, right? Because the beneficiary dictates, as Fabiola has mentioned, it's the tail wagging the dog. You know, the sender has sent, but the beneficiary prefers to receive it in a specific format. Now, how do we ensure that we give as much of options to the beneficiary to be able to, to receive in this way? And we also have to think of logistic challenges. The beneficiary has to, to cross a busy highway, go to the next village, or go to another city to pick up the funds. What's the most preferred way? So, of course, our own desire is to try to make it as user-friendly as possible, to give a digital option to the beneficiary. So we look for markets where the spread of mobile wallets, the spread of digital technology is more prevalent. So you tend to find that in some of the markets that we serve in Africa. Kenya is a good example. South Africa has a high digital uptake as well. But we also have to marry that with the fact that we are a North American company and we serve a lot of Latin American clients in Mexico and hopefully further south as we expand, and they prefer cash. So we have to work with bank partners who have branch locations. And I'll give another example, including Mexico. The Philippines is another good example. The Philippines is quite advanced in the spectrum of digital options. They have a wide spread, but they're one of the few countries that they still expect home delivery of cash. DR is another example. I mean, it's like people take money in the DR, bring it to home. And now something that we've stumbled into and found that. So we have to find partners that we can work with, trustable partners that can help us, give us multiple options. And to limit the number of touch points is also critical as well, because we try to work with one aggregated party, either the largest bank network in that country or a fintech that has a very wide spread. Because the more and more interfaces we have, and maybe Jacob can also talk to that as well, the much harder it is for us to manage as a technical company. So we have two sides of our brain in the last mile. It's technical development, managing the different interfaces, and then there's a marketing business development effort, which is trying to ensure that we give the customer the number of different options possible. And there's always a balancing game. Sometimes we go into a country corridor and we find out that the right way to get to the customer is way too expensive for us to do technically, and we have to sort of scale back. Or in some other options, the technology team gives us many options to give to the customer, and the customer just wants one option, which is just give me dollars over the counter, please. I don't need all of these other fancy options. So we always are spreading, there's a feedback loop that we have to manage. But from the last mile, we do always work with partners in country, try to work with large partners, fintechs and the bank, to give us the cash payout options as well as digital. But our preference is digital. Okay,
interesting. No, it's that's some definite tying a lot of the comments together. That's excellent feedback. Thank you for that, Gunby. I guess so Jacob, in your view, if we looked at the pandemic, where we're coming off of it from 2020, as Fabiola rightly pointed out, I think we're going to be stuck in this for a little while. It may not be exactly as it has we've experienced it up until this point, but until such time as things come to a new normal. What do you think are some of the long-term impacts from the pandemic into the payments and remittance segments from your viewpoint?
we already are seeing that even the very way people are working has changed, and a lot of employers have realized that it would be probably much better to keep the employees home in various type of business, not all. So the effect of that on payments, I believe, is yet to understand completely, but definitely it will have impacts. A lot of there will be redistribution of money, cash flow. A lot of money that is being spent on commute is not going to be there anymore, but there could be other type of spending that can come up. Activities in and around the house can increase, which is really good from a domestic and a social perspective, and that can call in for more expenses to be within the house itself, where most of the time we are seeing that children are not in the dorms or in other places anymore. They are tending to be home, but that may continue to be the same. That may continue to change because students will continue to want to be in the campus, but other activities are increasing in and around the household, which may call for different a varied type of expense that can incur in that life, the change of lifestyle. So how will that affect payments processing? Who initiates payment? Who will be controlling the initiation of payment, whether it will be the payer or the receiver? All those things we are starting to understand. And from a technology perspective, all we can do is make things available. So our focus is to not to make too much prediction, but to anticipate any possibilities and then be prepared for that.
Excellent, excellent. Okay, very interesting. I guess what I'm going to do is I'm going to actually open it up to some of the Q&A section that we have, and these would be questions we can get each one of you to comment on if that works. Here's one. If with the recent pandemic, can we assume that the new digital customers, I guess you talked about this earlier, that it sounds like, I heard that earlier. I think Fabiola had mentioned that the new digital customers looks like they're here to stay. Would you, Jacob and Kunbi, agree with that?
Jacob, you want to take that question first?
I think we agree to that. I agree to the possibility that the changes are going to stay, but there will be some kind of rearrangement, taking into consideration what is of interest and the risk. Once we remove the risk factor, then there could be some rearrangement, and that is yet to be understood.
I think that they're here to stay. I think convenience plays a real role in all of this. And I think there was a reluctance by some of the generational impact. What we're seeing is the millennials and the Gen Zs obviously were always prone to digitalization, but baby boomers and who typically form the backbone of the remittance platforms in terms of usage, they are now becoming more hip to the game. They are obviously concerned about their health, concerned about concerns about interaction with other people. So they decide to embrace the digitized that path. So essentially, just think about somebody in the household saying, "What are you doing all the time?" And the son or daughter is, "I'm on TikTok, I'm on something else." And they say, "Well, I don't want to go to the store and send money. Can you do it for me?" And they're like, "Oh yeah, there's this platform that I use calling to express." And then that's how we convert that person to digitalization. And then that person spreads it in their WhatsApp group. Just anecdotally, I always say my mother, who is, she's over 80, she's close to 80, sends me more posts on Facebook and WhatsApp than anybody I've ever met, because she's always forwarding this information to me. Those are the new customers that we're actually finding who are here to stay, who would never have considered digital in this without the pandemic making that shift. So I think that they're going to stick around. Yeah, that's my bet.
Excellent. Okay, I guess so. If taking that customer behavior is another one that's a good segue. How would you view the customer behavior moving the needle in terms of retaining the newfound digital growth that you're seeing today? I said, if you wanted to start, could be.
Okay, do you mind repeating that question again? I just want to understand the parameters around it.
Sure. I guess, with the new customer behavior, if we're starting to see a lot more of the population gravitate and stay with the digital side of the business, how do you view that behavior moving the needle in terms of retaining the business? So what do you think you need to do to continue to retain that?
It's simple. I mean, I don't think the customer behavior changes whether or not they're in a digital format or they're in the come across the counter format. It's fundamentals. Deliver excellent customer service, be transparent with your customers, and be available to your customers because they're going to interact with you at any given time. I guess that third point, availability, changes now that you're in the digital world. In the 9 to 5, 8 to 7 world where we ran businesses through agent locations, cash in, cash out, after 7 p.m., drop off, weekends were not open, people understood that. But now people come to our platform and expect availability midnight, 2 a.m., whatever, because of time zones. They want to get that fund to the next person at the time zone that makes sense for them. And so you end up having transactions that cross our late night hours. And so you have to have a customer channel that can help guide and support them. You can't leave them hanging if they have a question at 1 o'clock in the morning. And if the transaction doesn't go through, you have to give them feedback as to why it didn't go through. So customer behavior is now much more about, I expect to be served all the time, and not just 9 to 7 or 8 to 5, Monday through Friday, which I think I could have gotten away with for half of my customer base prior to the pandemic.
Okay. Fabiola, any comments on that one? Or Jacob?
No, I would like to pass.
Okay, no problem. So I guess if we were to say, so Fabiola, there's a question here, I think it's more geared toward to you, to be quite honest, as from the central bank's perspective, in your role in compiling the remittances, as you talked about at the onset, the split between that and the regulatory side of your role at the central bank. What are some of the, given the difficult times we've had globally, have you seen, are there any particular drivers of growth from your vantage point?
Drivers of growth regarding?
In terms of what's driving the question was in terms of what's driving some of the areas of business that you're seeing from as the central bank compiles the remittances. Are you seeing any particular segment of the industry to growing on one side versus another?
No, I think everything is reflected in the statistics we publish in our webpage. And yes, we saw an increase in remittances at the end part of the year, even with the pandemic. But the growth isn't concentrated in one type of player. It's in general. It's growing using all the channels that we have already in place. We don't have any new channels opened because of the pandemic. But yes, the remittances, the flow of remittances grew more than expected last year.
Okay, interesting. No, it seems to be a common trend through all three. It's as we're nearing the close of the panel session, I guess I'll include a couple extra questions in here. Jacob, do you foresee any variation in based on what you've seen in your business from ECSFIN's perspective over the past year, in terms of the amounts that are sent, in terms of the value, the size of the payments that you're seeing come across ECSFIN's platform? Have you seen any major reduction or increase? And if so, what are your thoughts on that?
Concerning the amounts, we are not involved in. It's a confidential thing, and we don't get involved in the how much money is involved in a certain transaction, because we are purely processing and we are not getting into the calculations or anything. But what we are seeing is fluctuations in the volumes. The volume fluctuations, we are seeing some very stronger growth in the hedge fund volumes. Maybe there are some disturbances there, I guess. We are seeing the volumes going up sometimes 25%, then instead of seeing like within 5% variations. That's one remarkable item that we are seeing. And similar things are happening in banks. In banks, what is happening is real-time payments are picking up a lot of volumes. So when we are providing real-time payments in several countries, and we are seeing not only a migration of ACH type of payments into real-time payments, but we are also seeing a growth, total growth as well, volumes increasing tremendously. In whichever countries where we have deployed our payments platform, our volumes are reported to be growing very, very strong. I don't know whether it is applicable just to our customers or whether it's applicable to the region as a whole, but that's what we are seeing.
Okay. Could be. Would you have any thoughts on that same question?
Yes. We would love to be able to give our customers a larger amount so they can send. I'm sure, again, with Fabiola on the call, we have to follow the guidelines of the regulatory authorities from a KYC and AML standpoint. We are trying to build a platform or build an ecosystem that encourages what I call microtransactions, where you can send as multiple times as you like because the fees are extremely low, near zero. So that therefore you don't feel compelled to send one big bulk amount to a destination, which then ends up being split into numerous formats. But again, it's about flexibility. It's about giving the customers what they feel they need. And you may have a variety of customers on our platform doing different things. So let's say somebody is supporting a construction of a home back home in the DR or in some other country in Nicaragua or Honduras, right? That person is going to be sending large amounts, anywhere between $5,000 to $15,000 episodically as they meet deliverable milestone for the contractor. So the person has been in America for 25, 35 years, been in Toronto, been in Vancouver, and is planning to go back. And they want the home to be built, or they're building a home for their family that they left behind. When we stymie the ability to send money, because we are capped by KYC and AML reasons, the person feels frustrated. And they don't necessarily trust the formal banking system in our countries because they feel that the banks will take advantage of them or the wires don't get to the destination. So they tend to go to money transfer operators. And if we can't send such large amounts, and it doesn't sound like a lot, but 5,000 is usually a cap for many of operators like ourselves in our business, daily caps. They end up going to a more informal system and then, all bets are off as if that works out. So yes, we'd love to see the limits raised, be able to cater to that segment of the population, which we are always trying to communicate to our banking partners that they do exist and they're a strong minority. They may only be more than 5%, but they send almost 20% of what goes to our platform because they want to send large amounts, paying for, like I said, construction of homes, large medical bills. Somebody's having an operation. It's not cheap, and they don't want to send it 3 times when the hospital is demanding a large bulk payment. So we'd love to increase the limits, but at the same time, we also are trying to find ways to encourage our customers to do microtransactions, multiple transactions to get to that higher number, not layering or anything else, but being able to give them the option to send to numerous people or participants in their own home ecosystem in smaller amounts. So it's a bit of both. Large amounts we'd love to be able to do, send higher, but at the same time, give people more options to send multiple times.
Interesting. Okay, fantastic. I guess we have time for one last question. Just keep it within the time frame. This question is more geared towards, I think it's best answered by Jacob. I guess, Jacob, if you were to summarize at a high level, what would you view as some of the challenges that are faced by banks in adopting blockchain from ECS Fin's perspective?
Thank you, Thomas. What we are seeing is, first of all, we are seeing 3 or 4 different type of challenges. One is educating the bank to help the bank understand in a language easy for all their decision makers to understand, in maybe in few sentences, what the whole thing is all about, how does it work, and also to know, realize, and measure the risks involved in it. What is the risk and how can it be measured? And these are some of the decision level questions. And once that questions are answered, the next level of questions would be, let's say the bank is willing to make an attempt, like a trial, not necessarily make a commitment, but to see how it works in a real environment, maybe play with a few dollars. So for that, we are able to, one of the biggest challenge banks face is to have that in their environment, it takes unlimited amount of professional services and integration cost and a lot of overheads. That's what they have seen in the past. So that's one area where we are able to quickly help them to adopt the solution and go on a trial basis without risking time or money, and also measure the amount of money they can risk at any period of time. Since they are converting traditional currencies to digital currencies, and it may be happening through multiple fronts, there should be a way for them to limit the amount that they are risking in various type of currencies, and get notified and take decisions and play within certain range. So if these items are assured to the traditional banks, they are able to go into a trial and see whether this works out good for them or not. Instead, if we take an approach where we say that, okay, you make the final decision today, and then you're going to invest a lot of money, and then let's see what happens, then that is not very much well accepted by banks, because many banks have spent a lot of money and did not see much results. So these are the challenges that we are able to help the banks overcome to go through a risk-free method of trying out these newer rails and see whether it works well for them.
Excellent. Thank you for that, Jacob. I guess I'll open it up to Fabiola and Kunbi, or I guess Fabiola, is there any final comments that you'd like to share with us? And I'll also extend the same to Kunbi and Jacob after.
Yes, from the point of view of central banks, all these innovations and evolutions are welcome, but we have to keep in sight our main objectives in this. One is to promote efficiency. Efficiency is faster and cheaper. And the second one is anti-money laundering, because we have to enforce this, and all the institutions involved have to comply with this. And the final one is consumer protection. Those three are three things we need to have in sight as new entrants come into the financial ecosystem, because sometimes those new companies are not used to deal with regulations and are not used to sending reports to the authorities and things. So they have to change their own cultural, they have to
mindset.
do their own cultural, yes,
Right.
the mindset, and they have to adapt. And because it's a mutual adaptation. The regulators are changing in order to embrace all these new players, but the new players, they need to comply with the regulation, because it's for the good of the whole system, of the system as a whole. So as we foresee, this is going to be a tendency that's not going back. And the big challenge is to balance all the innovation and the regulation. And okay, we can do this in this side, but you need to comply in the other side.
To transition them in, correct,
yes,
right.
Yes, we always have to have in focus the three objectives. And I repeat them because it's important. Efficiency, the anti-money laundering and the compliance part, and at the end, the consumer protection. And all this takes a big amount of work in education and in culture, and everybody has to work together. We cannot do it alone as regulators. The market, all the players have to work towards these objectives in order for it to work.
Excellent. That's excellent feedback then, and really very well made points, Fabiola. I guess those are areas I think that also have touch points for both Kunbi and Jacob. Kunbi, if you any final comments on that particular topic?
Yeah, I mean, we're a regulated entity, of course, and so just like Fabiola, I mean, I have my own central bank that I have to support from a reporting standpoint and KYC, and for where we are in the today, looking at 2021, I use the word exciting, but I don't use the word likely, because it's exciting for two reasons. One is that as a consumer-to-consumer company, we feel the pain of our customer base who've had to endure a pretty hard year from an economic hit to their wallets. loss of income. Some of them have lost family members. You know, it's been tough on them. So how do we translate that empathy into the efficiency paradigm that Fabiola has just brought forth? Because we want to bring the cost down further. Because they're not going to recoup those lost wages. They're not going to recoup those lost loved ones who are working, who are supporting people back in other parts of the country and other parts of the world overnight. So the excitement is how do we take advantage of the technologies and the digitized trend that we're seeing to pass that back on to the consumer base that we support. You know, so for me, it's exciting. How do we find, it's a difficult equation. When things are booming, like prior to the pandemic, we could be a little lax and late in innovation because people were just used to the normal things. The new normal, as you have also referenced, Thomas, is going to occur. And how do we adapt to that new normal and let the customer who has got to replace those lost wages, like I mentioned, adapt to that new normal and help them back on the track to be able to support their whatever ecosystem that they're supporting in a foreign country. So for me, I'm excited and I look forward to tackling that challenge.
Excellent. Jacob?
Yes. I believe that there is a big imbalance in the way compliance is being implemented or enforced to the disadvantage of traditional banks, especially larger banks, where they are fined with unreasonable amount of money for mistakes that are probably not very intentional. At the same time, private companies and tech companies are able to get away with intentional mistakes and not being caught or not being able to caught in an easy way. So we as a technology provider, we get approached by a lot of private payment companies to find out methods through which certain routing through different countries, avoid certain methods. All those strategies are built around how to get away from this compliance visibility. It's just like saying, okay, we have new antivirus software, but the viruses that are coming today are not being taken care of by yesterday's software. So there's like a race between this imbalance. So we are seeing several banks pull away from certain regions, and that is causing other type of banks to quickly come up and take that space. So I would say for a technology provider, we are just equipping all parties in the way they would like to be equipped, and we offer them all kind of filtering and compliance and methods to accomplish their goals. But I would say it would be of best interest for the regulators to take into consideration that there is an imbalance. And if that imbalance can be, if that gap can somehow be filled, then there will be a fair play between traditional banks and all other participating players in the market.
Excellent. Okay. Well, I think we're just about out of time. I for one have learned quite a bit from this discussion today. It's been very informative and very productive. I want to thank all of you very much for taking the time out of your busy days to join me on this session, and hope to have the opportunity to join you for a following session to learn more about progress that each one of you are making in your respective areas. Thank you all very much.
Thank you very much. Thanks.
Have a great day. Thank you.
Okay. Bye.